So Friday saw the bulls concede defeat. They just gave up the ghost, really. And as soon as we broke through that 200-day moving average, you know, the writing was on the wall. We've also taken out the March low, which came in at 4099. It's blasted through that today. And, you know, where does this go now? Where can we predict where the market would go? People say you can't predict markets. I say you can. So if I'm looking at it from purely a technical view, because overall I like gold, I think it's a good investment, not just to wear. I like it. Anyway, it's not been able to get back above its daily pivot today, which is coming in at 4132. We've been to 4118. Not quite good enough. Obviously, the states haven't opened yet. They're probably just sort of getting out of bed and having a coffee, having a look around. I mean, you know, since Friday, since it broke, and when I did the video on Friday, it just had that feel about it. Although the bulls were resilient and they, you know, they kept charging in at that 200-day moving average, which to some is a trend changer, I have to tell you. But once it broke, you could see that the sellers just kept pushing all the time. You know, from where we come from, the giddy heights of 5,600 way back. Well, that was, well, it's been this year, but I mean back. Since we've come off that level, February, yeah, it's February time. Since we come off that level, we have seen, you know, good retracements. But this last one, this is where you got to the point where the bulls are giving up. But you could see the sellers wasn't. They were forcing any move to the top side, any move. They were forcing it through and push it lower. Now, I've used very long-term fib levels. I'm going back, oh God, November 2022, okay? And we've actually broken through the 38.2 fib. It's quite significant, and that comes in at 4089. So where do we go from here? We're seeing a little bit of a bounce back. We haven't done any damage at all to the top side, none. So, you know, we're around the 4085.6 level at the moment. Let's wait and see what the states do. Let's have a look. But I have to say, we are looking slightly oversold on the daily charts. You can see from our indicators here, we are looking as slightly overcooked, but we're not looking like that on the weekly or the monthly charts. So it's short-term buyers against the longer-term traders. I think gold's going to struggle. I do, unless it has some form of news come out and it stays above that 38.2 fib level, but it's got to break above the 200-day moving average. If it doesn't, unfortunately, it's a one-way street for gold, and you'll be looking at quite a significant area. You're looking at, I'd say, right, 3,500. Hate to say it, it's not what I want to say, but 3,500 would be a target if we can stay, if the sellers can remain in control. If they can do that, keep that market down, then we have a good chance of reaching, as I said, that support zone. Okay, well, I'm Carol Palmer from Charmer Trading. Have a great afternoon. Catch you all tomorrow.